Hello and welcome to day number 74 of our Travel Trader series. I'm here in Hamburg, Germany, and I want to talk to you how to benefit actually from a crash after it happened. And we all know that most people are afraid of, oh, there's a stock market crash, all the prices are coming down. Actually, my students and I, we like to see these things happen. Well, I wouldn't say we like these things to happen because we know how many people are affected by it, but we know how to deal with these things, and we're actually able to make a lot of money when the prices go down. And I want to share something with you for those of you that weren't able to visit one of my free speeches that I'm holding throughout Europe on how to actually benefit from these kind of things. So, when we first start to think about how to make money from the stock market, there are actually two ways, and these are the only two ways where we can make money in general. The first thing is what we call capital gain. I think I already explained it. So we buy something at a low price and we sell it at a higher price, and the price difference is our return, our earnings. So that's what we win, and that's what we call capital gain. The second thing is something that we call cash flow. Cash flow is we own something. In this case, we're talking about stocks. So we own a stock, and as the company makes money, it pays out something that is called a dividend regularly, once a year, twice a year, 4 times a year, 12 times a year, depends on where the company is from and what the nature of the company is. But you get something as capital gain, so you get some return simply by owning this thing over time. Now, when we have a crash, something that we see at the moment where we are coming down, things get very, very cheap. So basically the market tells you, hey, what was like 30% higher a while ago, in January, end of January, now came down 30%. So it's like everything's on sale, everything's like 30% cheaper. Now I wouldn't go out and Monday morning and immediately buy. We still have good chances when we drop further. However, at one point you will realize, if you have a look at the stock market, that we kind of found the bottom and now we are going up. And once you see that we have a week or are in the second week where we start to go up, that's usually for a long-term investor a good idea to start buying, because now it seems that we kind of found the bottom, where if we would go down further, we literally buy at least at a very good price. So now what can we do? We have different types of companies. We have companies that are very, very affected due to the crisis we have at the moment. For example, automotive sector, or everything that's travel related, so hotel chains, tourism companies, travel agencies, or airlines. These will be the ones that are very, very heavily affected, where I would say once we realize how big the crisis actually is, they will still continue to fall. So you would wait until you buy them. Now you got to decide if you want to be in the capital gain game or in the cash flow game. If you're on the capital gain game, you want to buy them at some very low point, and you want to wait just a while for them to go up and to buy something. But capital gain, if you are knowledgeable on how markets work, is something that you can do literally nearly every day, because markets move up and down all the time. So you can always do something with capital gain on the short term. So what I want to talk about today is more like a cash flow strategy, where we buy something and we want it to go up, of course, so we have some capital gain, but we're not interested in selling it. We want to have the cash flow from it. So that's when we have a look at companies that pay a good dividend. So the average dividend, if you have a look at the 500 biggest companies in the US, the average dividend is around 2.0%, or it was about 2.0% before we had that drop. Now, because we have the lower share prices where we calculate the dividends again, it's a dividend yield might go up. So we want to have a look at companies that are above average in paying out dividends. Usually these are companies like telecommunication companies, pharmaceutical companies, companies that deal with utilities like water, electricity, gas, these type of companies. They have quite a stable business and they pay out steady dividends over time. Now the benefit for you will be that basically from one crash to the next crash, we can say that many of these companies like triple or quadruple their price. And the same is true for the dividend that they pay. Let's say after the crash we find a company that pays like a 4-5% dividend, and the stock price over the next few years goes up and up and up, like 3 times or 4 times. That will be the same for the dividend, because the dividend yield, so the percentage that you get, is always calculated on the current price. So let's imagine we buy a company at 100 euro, US dollar, Swiss francs, British pounds, whatever your currency is, and then it goes up to 300 or 400. If you have a 5% dividend on 400, then you get 20 euro, US dollar, British pounds, again, whatever your currency is, you will get a 20 euro return or dividend yield of 5% at 400 euro. But the magic is that you only paid 100 euro when you bought it after the crash. So you bought it at a very cheap level. And then you had a 5% dividend, which equaled 5. And now it went all the way up to, let's say, 400. Now you get 20 as a dividend, and that would be a dividend yield of 20. And you will get it like year over year over year, and you will get more and more. If you pick stocks wisely and very, very good, and you do it from one crash to another and the next one, you might even end up having invested in companies that give you a 50%, 70%, 100% or 200% return on investment literally every year, because you were able to buy them years ago at a very, very low price. So these are phenomenal results that you can do. Now, as I said again, I don't think that everything is over and we will jump up and everything will be done next week, but this is the time where we could have a look into the markets and prepare ourselves to find great companies, so companies that will exist throughout the crisis, that have a good dividend yield in the past, ideally dividends that were going up and up and up. This is something that we call dividend aristocrats. So that's something to look for, companies that you understand, where you know the business model, and where you can now buy at a cheap price, at a bargain. As I said, again, probably not on Monday, but over the next few weeks, when we see, okay, now it seems we hit a bottom, we go up. As coronavirus is a seasonal event and it's a flu type, we can pretty much expect that from April on, most of these things are done due to weather conditions. So that's when the flu comes down, usually in at least Europe and the Northern Hemisphere. So that would most likely be a good time to go in. However, if you see that we hit kind of rock bottom and now going up for 1 week, 2 weeks or something, that might be a good entry point. And then our intention for this strategy is to hold it pretty much until eternity and to benefit from the payouts that we regularly get as a dividend, and to make phenomenal results, not in the first year, but in the second, third, fourth, fifth. Typically between these crashes we have something like 6 to 8 years, and then we hit another recession or something happens and we go down. So we can expect that for the next 6, 7, 8 years we are likely to go up to double, triple, quadruple the share prices, and to double, triple and quadruple our dividend yield as well. And I wanted to share that quickly for you, because now we are actually in that situation where we can apply these kind of things. So maybe you want to have a look at what money is available for you for investments, or money you don't need. You might want to have a look at some stocks and companies that are attractive in terms of their price and dividend yield ratios. And you might want to check on the stock market prices, or the stock prices from the companies you looked at regularly, to find great opportunities to buy and to actually hold these companies. I wish you lots of success with it. If you have a question, if what you found might be a valid or good thing for that strategy, just let me know in the comment section, and I can give you, let's say, at least my opinion. I cannot give any investment advice, of course, but I could at least say whether the things that you observed are, in my opinion, the same things that I observe, or if there would be better or nicer alternatives, but that's up to you to decide. So if you have any questions on it, how to do it, what to do, or whether the stocks you're choosing are good ones, let me know in the comment section, and I'm more than happy to answer these things. Thank you very much for watching. I wish you a great and pleasant day today, and yeah, looking forward to talk to you again tomorrow. We will surely have another interesting topic. Hope you enjoyed it. Have a great evening today, and goodbye.